Have you ever wanted to buy a call option but thought it was just too expensive? You're not alone. Many beginner traders buy call options hoping for a big move, only to watch time decay slowly reduce their value. Fortunately, there's another strategy that can lower your cost while still allowing you to profit from a bullish move. It's called the Bull Call Debit Spread. Let's see how it works. Imagine a stock is trading at $100. After analyzing the chart, you believe the stock has strong momentum and could move higher over the next several weeks. Instead of buying a call option by itself, you buy a $100 call option and at the same time, sell a $105 call option. This creates a bull call debit spread. Because you're buying one option and selling another, the premium you receive from selling the higher strike call helps reduce the overall cost of the trade. That's why it's called a debit spread. You pay less than you would if you bought the call option by itself. Of course, nothing in trading is free. In exchange for lowering your costs, you agree to limit your maximum profit. If the stock rises above $105 by expiration, you've already reached the maximum value of the spread. Even though your profit is capped, many traders are willing to make that trade-off because they've also reduced their risk. One of the biggest advantages of a bull call debit spread is that you know your maximum possible loss before you enter the trade. If the stock falls instead of rising, the most you can lose is the amount you paid to open the spread. That's one reason many traders prefer debit spreads over simply buying call options. Now let's talk about when this strategy works best. A bull call debit spread is designed for a bullish market. You're expecting the stock to make a meaningful move higher before your options expire. The stronger your directional conviction, the more attractive this strategy becomes. Another factor to consider is implied volatility. When implied volatility is relatively low, option prices are generally less expensive. Many traders see this as a favorable environment for debit spreads because they're paying less to enter the trade. If implied volatility increases after entering the position, that can also increase the value of your spread. But there's one thing you should never forget. Time is working against you. Every day that passes without the stock moving higher slowly reduces the value of the position. That's why it's important to enter this trade only when you believe the stock has a good chance of making its move before expiration. One mistake many beginners make is buying a debit spread simply because they're bullish. Being bullish isn't enough. Ask yourself this question instead. Do I expect a meaningful move before my options expire? If the answer is yes, then a bull call debit spread may be an appropriate strategy. If you only expect a small move or the stock to trade sideways, another strategy such as credit spread may offer a higher probability of success. Before we finish, here's the framework I want you to remember. A bull call debit spread is a bullish strategy. It lowers the cost of buying a call option, it limits both your risk and your maximum profit. And it works best when you expect a meaningful move higher before expiration. Remember, the goal isn't to make the biggest possible profit on every trade. The goal is to choose the strategy that gives you the highest probability based on what the market is telling you. So far, we've looked at what happens when you're bullish on a stock, but what if you think the stock is going to fall? That's where the bear put debit spread comes in. In the next video, I'll show you how this strategy works, how the trade is structured, and when you might consider using it. Successful options trading isn't about predicting every move. It's about building a framework for making high probability decisions, one trade at a time. That's it for today, traders. I hope you found this video valuable. If you did, hit the subscribe button and turn on notifications so you never miss an update. Leave a comment below and let me know your thoughts on this video or tell me what options trading topic you'd like me to cover next. Your support means the world to us. See you in the next one.